The big change was in the buying by Wall Street, the buying by institutions directly from the company. That number was up really big, nearly 400% quarter over quarter. There seem to be little signs that Wall Street is moving closer and closer towards adopting digital assets, and so we could see that in the third quarter.
And about 70% of that is coming from institutions in just Q3 alone. That run-up caused them to get really excited about the asset class and are now stepping into the space when prices are a little bit more attractive. The investors that we're interacting with, these are folks
They're
that
not
have,
the retail guys looking for the
these are folks
grade.
that have 10+ year track records of success. They have deep investment committees and deep convictions, and they're investing into the space for the medium to long term.
Despite skepticism from the big regulatory powers that be, Wall Street's enthusiasm for crypto is heating up.
I think blockchain technology has tremendous promise for the securities industry, eliminating costs. I mean, the cost of verification in the securities industry, incredibly high. If we can make that more efficient, terrific.
Finally, over the last few months, major Wall Street firms have been getting in on the crypto action. Goldman Sachs is set to launch its own Bitcoin trading operation.
For institutions out there who want to buy something other than cash-settled Bitcoin futures, we're going to offer, a small number of cryptocurrencies, virtual currencies. So in that regard, the conversations are real, and we're kind of building it out, and we've built out an institutional-grade platform that could scale very quickly.
You're going to see the institutions come in. It's going to kind of correspond with all of this custody and all this stuff ready to go. So to me, that's the bullish. That's the most bullish case.
Hi guys, wondering if Wall Street is ever going to invest in cryptos? I'm going to show you why they will and already are. There's a lot of people saying Wall Street is coming, but what makes this video different is that I'm going to give you a series of concise facts and proofs of why they are going to enter the market. Even some insider info, so keep watching. As you may know, a lot of money will potentially flow from institutions into the crypto market, and if it happens, it would trigger the next crypto wave. A crazy dream come true for you and I. So let's get started and look at facts. So first, let's listen to what the CARDANO co-founder has to say about Wall Street. Wall Street is showing up to the party with all their locked up capital. That's tens of trillions of dollars entering the space eventually. Future is bright. It is, my friend. Future is bright. They have tens of trillions of dollars that are going to be invested in cryptocurrencies. Right now, the cryptocurrency total market cap is about $200 billion. So even if only $10 trillion are going into the crypto market, this means it's a 50 times increase, and it will be focused on the top 10, I think. But how far are we in the process of institutions jumping to cryptocurrencies? Well, what Wall Street is saying publicly is completely different from what they're saying privately. Interest in cryptocurrencies is in an all-time high in Wall Street. Just listen to this podcast from UNCHAINED at the 57th minute. I'm going to play it. He's talking about how Wall Street is reacting from the inside. Let's listen to him.
What we're seeing right now is, despite the drop in prices, despite the drop in volumes this year, the level of engagement and the level of seriousness that we see coming out of the Wall Street institutions and banks is at an all-time high. It's not, there's plenty of commentators that say that Bitcoin's dead. There's plenty of commentators that say that the bubble's burst and it's over. Behind the scenes, it's kind of full steam ahead right now. And what's pretty clear is nobody wants to be first, but everybody wants to be a really fast follower. And certainly no one wants to be last. So I do think whether it's what Goldman has announced they're doing or what ICE is doing, I think something is gonna I think kind of break open that dam, and it's gonna be very, very popular and very socially acceptable for a bank to be offering to their clients and customers access to this asset class pretty quickly when that happens. When it happens, I don't know. But when it does happen, it's going to happen very fast.
Crazy, right? We can already see the demand increasing. GRAYSCALE, a digital asset investment firm, has seen an increase of more than 30% of demand in the third quarter compared to the second quarter of this year. with the large majority being from institutions, 70% being from institutions. Now let's see about the big institutions and how they're reacting to it. So we have JP Morgan that have to adapt. The company said it could be forced to adapt its products to retain customers, while stressing that it could eventually lose market share. Yes, they have to adapt, otherwise they will lose market share. So it makes total sense for them to get involved in cryptocurrencies. Morgan Stanley then announced that it was helping clients clear Bitcoin futures contracts. They're already helping clients buying Bitcoin. In March, the company told clients that Bitcoin was similar to the NASDAQ but moving 15 times faster. Furthermore, Morgan Stanley speculated that financial markets would move toward the use of crypto in the future. They're also going to use crypto. Talking timelines, those are really interesting quotes that are putting everything in perspective. Think about how institutional investors operate. It's hard to tell your boss, I have money in places you have never heard of. You need a trusted name custodian, a Japanese bank or HSBC or ICE or Goldman Sachs, to allow institutional investors to feel comfortable. And that's precisely what's happening. That's what's preventing institutions to invest in cryptos right now, but this is changing. I think now in the market you have a lot of regulatory clarity that didn't exist even a year ago. You have different types of order flow. You have retail and institutional. As that institutional flow increases critically with the rollout of new institutional products, you see more of a level off of consolidation in the market. Large financial institutions are capitalistic in nature. They are interested in serving their customers, who want to make money, of course, while driving better financial performance for themselves, taking money in as well. As more customers look for Bitcoin, cryptocurrency, and digital asset products, these financial institutions will be forced to participate. Again, they'll be forced to participate. And this sums it up perfectly. Bitcoin and cryptocurrency will continue to grow with or without the support of the legacy financial players. With that said, the markets benefit from the sophistication and size of their participation, which means that whatever happens with Wall Street, we're talking about Wall Street when they're going to invest, to be involved in cryptocurrencies, but it doesn't really matter because Bitcoin and cryptocurrencies are here to stay, and that's their role to adapt. Otherwise, it's basically this whole article is about adapt or be discarded. Now, what about ETFs? The approval of a Bitcoin ETF would have a very positive impact on the crypto industry. The main advantage is less friction for the mass retail consumer to purchase Bitcoin without having to deal with complexities of digital wallets, and exchanges. If the introduction of gold ETF to the gold market is any indication, we should anticipate a large inflection point post-Bitcoin ETF. Wow. What more? Well, we have more. Morgan Stanley now officially recognizes crypto as a new institutional asset class. This is also, it's huge, guys. There's no other word. I mean, now it is recognized by a big name as an asset class. And institutional investors need that. They need, when they're investing in something, they need it to be recognized by other institutions. Not only will it add credibility to the institutions, but also to the retail customers. Now it's not the talk of 1 year ago that Bitcoin is really bad. It's highly speculative, highly volatile. That it has nothing to do with regular investments. Now all of this is changing, and for the better. We also have some interesting quotes here. Now crypto enthusiasts were downbeat about the number of suits at the conference. It's not crypto enthusiasts only that are attending anymore. It's also Wall Street. And Wall Street attendees were euphoric Can you hear that? Can you read that? Wall Street attendees were euphoric. They want to make money. Wall Street is ascendant and is coming to dominate the entire cryptocurrency ecosystem. We have some more interesting quotes down there. Goldman Sachs has been public about entering the market this summer, but JP Morgan, Barclays, and others have all signaled interest in getting a crypto desk up and running by the end of the year. The retail exchanges have started to focus on institutions. That's what we're going to talk about with Coinbase. Exchanges such as NASDAQ and the New York Stock Exchange have said they are interested in participating when the regulatory regime is better defined. So with that said, if someone says that Wall Street is not going to invest in cryptos, I don't know where he gets his info. Now let's see all the platforms designed for institutions that are being created. Coinbase Custody, specific for institutions. The third Coinbase platform, now for institutions, with safe custody. We have backed from ICE, the Intercontinental Stock Exchange, which is the firm behind the New York Stock Exchange, which is the largest stock exchange in the world. We have Fidelity, which handles $7.2 trillion in client assets, now launched their Fidelity Digital Asset Services, a whole new branch for digital assets. Those are not minor players, they are the major ones. We have the NASDAQ that is also planning to become a cryptocurrency exchange in the future as the market matures. And it is already on its way to acquire CINNOBER, which is a Swedish cryptocurrency exchange. Now to really show you that something is moving inside Wall Street, we have major wallets. One thing you know with Bitcoin is that you can see all the transactions on wallets, all the contents of the wallets. You cannot see who owns them, but you can see the address and what it contains. And we have 5 wallets, big wallets, that have been created very recently and that gathered a lot of Bitcoin, that bought a lot of Bitcoin over the counter. So I took the first one, for example, and here we are. It's the same address. You can check it if you're willing to do so. And it has started to acquire Bitcoin on the 20th of October. And now it has bought about almost 60,000 Bitcoin, which is about $400 million. $400 million. Now there are 2 questions. Who's the owner and why is he buying that much Bitcoin? As of the owner, we have not a lot of possibilities. There are about 2,000 billionaires in this world according to Forbes, and most of them cannot get out that much money out of their investment easily. So it's got to be someone from the top Forbes list, or it can be, and it's probably, an institution. Now why they're doing it? Well, I can't answer this question, but they're preparing for something, that's for sure, and they know a wave is coming. Which leads me to one point I really wanted to make, which is that one thing I really want you to understand, so listen closely, is that the media is always manipulated, and cryptocurrencies are no exception to the rule. The media is literally controlled by the largest financial institutions, and they manage to keep the prices crashing throughout the year by telling us it was dangerous, not worth it, etc., so that they could enter the market at low prices. Just look at this clip.
Trend is clearly down. We're down 60% from the highs not long ago. Until it stabilizes, you can't touch it. Okay. I think you can press a short here. The trend is down, but
what do you mean
have to
press a short? That's massive. It's massive jargon on a Monday. Stop it, Chris.
You can be short here. Let's say it that way. But you have to be very mindful of your stocks. We see the volatility here. You can't be dogmatic about this. If it starts to go the other way, you have to think otherwise.
This is propaganda. I'm telling you. They soon will start saying these are great products, great technology that is definitely worth investing in. Mark my words. That's already starting to happen, with the sentiment in Wall Street seems to be changing as they got time to invest. Now their pawns are set and they're ready to burst the market. The ones who will be rewarded would be them and those who invested, who bought when they told us not to. Buy low, sell high. That's the whole principle, and only good investors do so. I'll tell you one thing, that's what I've done. I've bought XRP and other cryptocurrencies throughout the year, every month with dollar cost averaging, and I don't regret it. Now let's go to the bonus point, which concerns XRP. Ripple says that the sales of XRP from Ripple to the institutions have more than doubled in the third quarter compared to the second quarter. So this is an exponential trend, which again shows that the institutions are getting involved and interested, more than interested actually. They're starting to invest in cryptocurrencies. And XRP is no exception to the rule. Actually, in my opinion, the ones which will benefit it the most are Bitcoin and XRP. Bitcoin because it is the most notorious, it is a storage of value, and XRP because it has utility and it is working with banks. So of course, if they have the choice, these institutions will invest in something that supports them, that is not looking to destroy them. So as you can see, institutions are getting involved on different levels with cryptocurrencies. Not only is it a great investment opportunity and they know it's the early stages, but they also can use this technology to tokenize other assets. But that's for a whole other topic, so I won't dive into it right now. I hope you enjoyed this video though, and that it was helpful. If it was, make sure you share it with your friends and family so they don't miss out on this opportunity. And I'll see you in the next one.